Good morning, tradeologists. Well, today Avon Products, our gamma scalping trade stock, is up sharply this morning. We're short 290 shares. That gives us a long delta of 137. We're still short 290 shares. In order to get delta neutral here this morning, we need to sell another 130 shares or so. I'm going to be slightly now. There's a couple different ways you can look at this. Is your long deltas, and if you want to, you could play it a little bit to the short side. So you could say, well, if you think it's going to go down, you could do, instead of selling 100 and, well, it's moving quickly actually now. If you sold another 150 shares and you wanted to be slightly short delta, you could actually sell a little bit more than that. You could sell 170 shares. Or if you wanted to be slightly long delta, if you thought that the stock was going to continue to move up, then you'd only sell maybe 110 or 120 shares. So that gives you a slightly long or short delta. Let's take a quick look at the chart here on AVP. First, we'll take a look at a longer term 2-year chart. It looks like we're in this trading range here, and it's kind of bumping up against the top end of that range. So once we get up to wherever this line is here, actually we could probably move this down just a little bit to there. Looks like it's kind of breaking through there, so we may want to have a long position. We could sell some short here just in case it does retrace, or we can kind of hold on and wait and see what happens. The best choice is probably to keep an eye on, if you have a little bit of technical analysis, you could probably do a little bit better by trying to time your trades. Now we've got the ultimate high up here on a 20-day, 30-minute chart. The stock has moved up quite high here, so let's just go back here to the where's my chart? There it is. We want to do a price level right in there, which was the old high where before it started selling off again. So once we get to that point, we don't want to wait too long to adjust our deltas because we may miss an opportunity here. So I mean, at this point we are long 165 deltas. I'm going to try to round out the number of shares that we have because we're currently short 290 shares. If I sell 110 shares here, that'll kind of round out our numbers. So I'm going to go ahead and send that in. And we sold short 110 shares. That gets us almost a delta neutral. We're a little bit long delta, 50 shares long, just in case it continues to move back up a little bit. So if it continues to move back up a little bit, we'll have those long deltas working in our favor. And if it decides to sell off at this point, we're 400 shares short. So either way, we're okay. As long as if this continues to move up, the idea is to continue to bring it back into a delta neutral position, so that we are, so we're able to take advantage of the price fluctuations as the stock moves around. Right now, we're short at, let's see, what did we get short? We got short at 37 and just a fraction of a cent. So that is right in there, we're short. We could put a little note in there. Short at 37, 110 shares. So now we are now we're short about 400 shares. All we have to do is keep an eye on our deltas. As it continues to move up, we can sell some more short, or we can let the deltas ride if we think that there's a good opportunity here for the market to continue higher. And that's pretty much all we have to do. Remember that our full stock position would be about 400. Well, we're 400 now. Our full stock position would be at 1,000. Once we get to 1,000 shares with a delta neutral position, then there's pretty much nothing else that we can do after that point. We can't make any more money, but we can't lose any either. One of our call positions or our put position is going to be deep in the money, and at that point there's not much we can do. If the stock sells off, we'll be short 1,000 shares and we'll make quite a bit of money on a sell-off. But at this point, we just kind of keep an eye on our delta. We want to be a little bit long delta maybe in case we get a pretty good rally here. We'll make some additional money on the long side because of our long call. Otherwise, we just kind of keep an eye on it, and we'll try to find some other opportunities in which to do some gamma scalping on other issues. I changed the gamma worksheet just a little bit. As I find new stocks, I kind of bring those down and kind of add them to the list here as I go along. I've added a column here for days to expiration, which you can add into your spreadsheet if you like. I've also added a little a column here for intraday moves. In other words, what's the expected move for the stock intraday? And the way we did that, if you recall, is that we went into our Analyze tab, we went over to Probability Analysis, and we took the range of the probability of touching with the current ranges, and right now for AVP, it does change on a daily basis. It's 42.58 minus 32.22. That's 1036 divided by the number of days left in this expiration cycle, which is 18. And that gives us a 57.5 cent move a day. So we're still close to 58 cents. So that's all you have to do to determine kind of like when you should probably begin adjusting deltas is right around a 58 cent move in the stock. So let's go back here to our main window, and we'll take a look at our risk profile. We're long 99 deltas. Once we get to a couple hundred deltas, I want to probably go short again. But as long as it stays around 100 deltas, we could sell another 100 shares short here. But I want to keep an eye on the chart, because if we can kind of determine where the high is going to be, then we can actually, when a stock moves up this sharply, the chances are for falling just as sharply. So we want to be able to capture those opportunities if we can here. This is a 5-minute chart. We can go to a 15-minute chart to give us a better feel for the stock itself. And we can see how this looks like it's gone past this here. We don't want to miss any opportunities in the stock. It has run up extremely sharp here. It looks like we have earnings announcements maybe coming out for the stock. Let's take a look and see if there's any earning alerts for the company. AVP, no, I don't see it. Let's see. Let's go down a little bit farther here. It looks like they got something coming out though, so we want to keep an eye on that. I mean, it doesn't matter to us actually. Large movement is good, but if it's too large, then we want to make sure that we're either long or short deltas. Yeah, here it is. Avon Products comes out July 30th before the market, and that's tomorrow. Okay, so we've got some earnings announcements coming out for Avon Products, and so they continue to roll up a little bit here. This might be some pre-market buying if people are expecting the earnings to be good. We may want to be a little bit long delta here. I mean, we're already short 400 shares, so with earnings coming out tomorrow before the market, which means today is the last trading day before the earnings announcement of tomorrow morning. So let's keep an eye on this. I don't mind being a little short stock and a little bit long delta, just in case we do get a good punch and pop up on the stock. So that's the way I'm going to play it today, and if I do any more adjustments, I will definitely let you know as usual. So stay tuned, and we'll see what we have on the rest of the trading day. And in addition, I'm going to be looking for some additional gamma scalping candidates here by filling in our spreadsheets. All I do is basically just keep this running. Every once in a while I'll just create a new spreadsheet, but as I find a stock that I'm interested in doing some gamma scalping on, I will just continue to fill in what I have on that stock and determine whether or not they're a good candidate. So that's all for now, and we'll talk again soon. Okay, just a quick update here. We're still only about a half an hour into the trading session, but I want to show you the effect of being long delta. See, as the stock moves up, as long as as long as you're long delta, you're going to make money, even though you're short the stock. You still have your long call and put position. As long as you're long deltas, you're going to make money. And today we're up $85, not including our gamma scalping trading at all, because you are long delta. So as the stock continues to move up, you're going to make money as the stock continues to move up. So it doesn't matter how high this goes, as long as you are long delta, you're going to be making money. In fact, $102 for each dollar increase in the share price, the price of the stock itself. So it's very, very difficult if this market continues to move. Of course, you continue to make more money. The chances are, however, that at some point the stock's going to pull back and it's going to go into a trading range. So the thing that you have to kind of think about is, where do you want to short again? Because you can, as we take a look at this, we're long 107 deltas. What I'd like to do and like to see is, okay, maybe we want to have a slightly long delta position. So I'm not going to totally eliminate and become totally delta neutral at this position. But I want to see where the stock, if it goes up to 200 deltas, then I might sell another 100 short. At that point, then we're still long 100 deltas. But if you can combine some technical analysis skills with your gamma trading, you're going to be much better off, because you can kind of take a look and see where the tops to a potential trading range is, and then you could do, you can short the stock to bring you totally back to delta neutral. This is really a dynamic way to trade, because you can make money. You can almost like the almost like the throttle on a car. If you press on the gas a little bit, you can, if it continues to go up, you're going to make money. If you think that, if you think a stop sign's coming up and the market's going to stop or fall even, you can get back to delta neutral to take advantage of the drop in the market. So, it's a pretty interesting way to trade. You make money whether the stock goes up or down. If you're a little bit more active, if you have time to watch your stocks, this is a terrific way to trade, especially if you can combine it with some technical analysis skills. So I'm going to keep an eye on this. I mean, we had a pretty good run up here. It looks like we had some selling in here, but it's continuing to run up. If it looks like it runs out of steam at some point, I also might want to take a look at a slightly longer chart here and see if there's any potential resistance points coming into play. Let's go into a 9-month here. Doesn't look like there's any particular. There might be a little bit of resistance around 38. So if I combine gamma trading with some technical analysis tools, I might be able to determine where there's a probability that the stock could kind of pull back a little bit. I don't see anything between where it is now at 37, 35, and 38 that would indicate that it would pull back at all. If I go back here, there's not really much here. I could go back a little bit longer, maybe on a 10-year chart. It doesn't look like there's any significant support or resistance points here that we could take advantage of. On a weekly chart, about the same. So, up until about here, I would say, then, at this point, we'll probably be, it's at 37.36 now. If it goes up another 60 cents, that's more than, let's see, when it opened at 36.50, that's over $1.50, almost $2, $1.50 up to 38. which is 3 times our expected move for the stock, intraday trading move for the stock. And you could also think of it that way. The intraday move that we calculated was 58 cents a day, based on the range probability divided by the days to expiration. So if it moves 3 times that amount, or $1.50 in a single day, that is a tremendous move here. So it opened at 36.50, and if it goes to 38, that's $1.50 moves. That's 3 times our expected intraday move. At that point, things get really interesting, because we could end up having a tremendous short position at 38 and watch the market and watch this particular stock sell off. Should be very interesting, though. So anyway, I just kind of want to bring that to your attention, that you can play with the deltas. We're still slightly long delta, and as long as the stock keeps moving up, we'll keep making money. $127 right now. And you know what? If we combine it with our technical analysis skills, and we can kind of determine where a potential stop comes in, or where support and resistance comes in on the stock, we could then get back to delta neutral by shorting more stock, thereby making money when the stock falls again. So anyway, just want to bring that to your attention, and trade with confidence. Okay, we're currently up about $142 in profit, and our delta is 148. We may get a little topping action here in our issues. So let's just take a quick look here. That shot up pretty strongly at 37.60. I'm going to lock in some of those profits by selling short another 100 shares of AVP. This could continue to roll, but who knows? We sold another 100 shares short of AVP. That locks in our profit. We're up 160, 170 shares dollars for the day. I'm sorry, $160 for the day. We're short 500 shares now. We're still slightly long delta, so if it continues to move up, we'll continue to make money. But if we get a sharp sell-off in AVP, then we will go back and capture some of those retracement profits. Yes, retracement profits, that's what they call them. So let's see what happens. Now we can day trade with confidence. And we're still long delta, so boy, if this thing continues to roar, we'll continue to make money. Well, as you can see, AVP continues to chug ahead, and it's almost up to 37.88 now. As soon as it hits 38, we might be able to go short a little bit more, but if we take a look at our analysis, because we are long deltas, we're up to $263 in profit for the day. If it keeps chugging up, keep making more money, and that's how the miracle of gamma trading works. Okay, I just found a potential new candidate for gamma scalping, so let's take a look at this. The company's name is Medtronic. Trades about 1 million to 5 million shares a day on average, as high as 10 or 15 million. We want to take a look at historical volatility. It's at a relatively low level. Historically, it's not at the lowest level, but it's at a pretty low level. Let's go over here to the trade tab. Let's take a look at the money straddle. Let's go ahead and go to buy straddle, and we're going to put in 10 contracts at 218. Let's go to our analyze tab. See what this looks like as far as a potential spread in prices. Looks like about $7-8. Let's enter it into our spreadsheet here. MDT. What was the straddle price? 218. And the range of probability here is 49. Let's see, 57.63 minus 4907. It's 856. And stock price is currently at, let's see, what's the stock price? 53.22. And the volatility is at 0.2576. And I would say low to mid, but I'm just going to say low. And then we just fill these in. And the profit index isn't huge, probably because the range is not that great. So I think it's one that we could probably keep an eye on. There's 17 days, so I fill this down. Let's see what the expected daily range is here. About 50 cents. It's not great, so we'll keep looking. I mean, there's potential here for it, but we'll keep looking. Keep as we kind of surf the net, we can always come up with other candidates. But that's how I just kind of quickly do a quick analysis on any potential candidates I come up with. Just another quick update here. The market AVP has come back a little bit. It's just kind of dropped off here a little bit. But because, and this is what happens during gamma scalping, because we locked in our profits as the stock moved up, shorting the stock as it was moving up, we were able to lock in our profits. So even though we're back to a delta neutral position, we still have our profits locked in here at about $278 for the day. So with a big move, that's exactly what happens when the stock runs up sharply and you have to get delta neutral. You lock in the profits as the stock increases in price, or if it's going down, you lock in your profits by getting delta neutral. So that was, it's a very nice way to trade. It's a way to trade that allows you to lock in your profits as you go. And as long as the stock moves, you can make money. The thing that hurts a gamma scalping position is if the stock doesn't move at all. So, that's what we want. We want a stock to move. So if you can go out there and find stocks that move, you can do gamma scalping with. Just make sure that the volatility levels are fairly low. Remember when we looked at our worksheet, AVP had one of the lowest volatilities, and it had one of the highest profit indexes. So that's exactly what we look for when we do gamma scalping. Okay, another quick update here. We may have a potential trade on Adobe. Currently selling at about $40 a share. It moves quite frequently in an up and down movement. We have I did a quick analysis here. Let's see what we got. The at the money straddle is $2.63. Range of movement is $10.07. Price is right around 41. The implied volatility is at 39. The historical volatility is right around the mid-range here. If we go back a little bit, you can see that it's probably, I wouldn't say it's high, but it's right in the middle. It's not in the low end either. That could potentially be a problem. Our profit index is, the range index is pretty good, not extremely high. The cost index is fairly low though for the price of the stock and the range that it moves. Profit index is right around 151, which is close to our AVP, and our intraday movement expected is around 59 cents a share. So that's a potential. I'm going to keep an eye on that. The nice thing with gamma scalping is that actually the closer you get to expiration, the more opportunities you actually have, because the price of the at-the-money straddle will be reducing, will be going down each day that you get closer to expiration, and the gamma will continue to rise the closer we get to expiration. So it's something that I will keep an eye on, and I'm just going to highlight that as a potential candidate, and I'm just highlight it that way. You can use any color you want, of course. Anyway, that's just a quick update how I go about evaluating additional gamma scalping candidates. Okay, just another quick update here during the day. Somebody emailed me a question asking if there was an easier way to pick stocks to put into our gamma scalping analysis. And yes, there is actually. If you have the Thinkorswim platform, it's very easy to come up with stocks because the real killer is the high volatility. I mean, the high volatility, if that is in an area that it's really so high that it would preclude you from doing gamma scalping on it, then it's almost a deal killer right there, that high volatility. So if you want to, you can start with a list of stocks that have relatively low historical volatility. And in order to do that, all you have to do is go over to Stock Hacker tab on your Thinkorswim platform, and then you just enter the information. Now, the last trade, I like to do stocks that are over $20, and stocks up to about $65. So I go to $65 on that. I mean, you can do stocks whatever you feel comfortable with. Those are the parameters that I like. I like anywhere from 21 to 65. And I definitely want stocks that trade over are trading right now over 1,000,005 shares a day. The market cap I'm not really concerned about. I really don't care about the market cap. Now, down here you have the volatility index, and I mean the minimum I think should be close to around 10%. Anything under 10%, if it's a 3% volatility, that thing just does not move enough. So 10% would be the minimum, and then I would probably look at, like 35% maybe at the top end of the volatility index, because I've noticed that, if it's over 35%, then you're getting in the middle of the range for volatility for most issues. And then you could do, some of these others like EPS if you want a stock price that has, if you have a stock that you want that makes sure that it's actually earning money before you start trading it. EPS you can fill in, but I mean basically these are the only ones. I'm only interested in stocks between $21 and $65, because remember that you have to buy 1,000 shares minimum, or eventually you might hold 1,000 shares of that stock. So you have to make sure you have the capital available to do it. And stocks in the $21 to $65 range generally are the ones that you're going to be doing, or I'm going to be doing. And I have, and I want to be able to do multiples of these. So that's the range that I'm looking at. And also, once you get below 21, the stocks really don't move that much, maybe 10 or 15 cents a day. So you really want stocks in this mid-range. Anything over 65 is going to start getting pretty expensive, especially if you're doing gamma scalping on more than one or two issues. So that's the range that I look at. I want 1.5 million shares at least, and like I said, the volatility anywhere from 10 to 35%. You might even want to go. Sometimes I go 15%. Because anything below that really is a stock that is not going to move that much. You really want something in the middle range, or maybe it's at the low end of its range right now. So we're going to sort this, and we're going to show 50 stocks, and we're just going to hit search. After we have all of our criteria, plugged in here, volume max, I'm not going to put a cap on that, and market cap I'm not going to do. The only thing I'm really interested in is the stock price, the volume, minimum volume, and the volatility range. So I'm going to hit search, and it comes up with a fairly decent list of stocks here. And if you do basically, I just sort it by EPS, so that the stocks that have the best earnings of the bunch are at the top of the list, and then I just start to go through them. Now, all of these, the volatilities are in the low 30s, mid 20s. So then I kind of take a look and see which ones may be potentially good candidates. Now you can also search, sort these by volume. Obviously, the Qs we've gone through, Microsoft. Intel, I don't know. I like to search by EPS. It gives me some of the sleepers out there, like McDonald's, maybe MCD. And then all you have to do is bring up your Gamma Trading worksheet and just start to enter the information in there and see if you have any potential candidates. As you can see, I've added a few since we last since I last did an update here, and there's a couple potential candidates in here. Adobe may be a candidate. It's in the middle of its range for historical volatility, though. Um, a couple others here that I've kind of been looking at, but if you don't want to just go by your own lists or maybe newspaper lists or something like that, then using the Stock Hacker tab in Thinkorswim will help you determine the best stocks, really. At least you can start doing analysis on those and start listing them into your analysis spreadsheet. Anyway, just a quick update for you. Hope that helps. I want to bring to your attention some of the finer points of gamma scalping and the reason why we go after low volatility stocks and stocks that are low volatility but have a high range. I've done an analysis on a number of different stocks as we continue to go down. However, take a look at the range here on AVP, and one of the reasons why it became one of our top picks. The range was 11.12 on the day that we did this, with an intraday move of approximately 58 cents, which was somewhat on the high end of the stocks that we had looked at. There was a couple others that were higher, but they also had higher volatility. And the price of the straddle. So our gamma scalping analysis worksheet really helps you stay out of trouble when it comes to both buying the straddle and finding stocks that have a high probability of moving. One of the reasons why we pick stocks with low volatility with a wide range and a fairly decent price on the straddle is because volatility can affect the price of the straddle in your favor if it moves up and against you if it moves down. So if you were to pick a stock with a high volatility, even though it has a much wider range to move in, the potential, if that stock stops moving, the volatility will collapse and you will lose money. Let me show you what I mean. You can see that even though the stock AVP, our stock that we're currently gamma scalping, has moved up, volatility has gone up slightly. I mean, it's only a matter of maybe 2 points in volatility, but let me show you what the current straddle is selling for. If we go to buy our current straddle, the one that we already have, you can see that it's currently at $3.53. Well, we bought it for $3.10. It's gone up, almost, about 43 cents from where we bought it. So a lot of the profit has come from the fact that the volatility has increased. Remember, we mentioned that the Vega is a very powerful Greek. In fact, if volatility goes up a single point, Vega will increase our profits by $53. Well, that's exactly what's happened here. Volatility has increased, increasing our profits in this issue. So if we pick up a stock with a high volatility and the stock doesn't move, our volatility will get crushed. Not only will we lose money on the theta, but we'll also lose money on the Vega. That's why, you may think that not doing this worksheet will save you some money or save you some time. I don't know what's going through your mind right now, but if you think that you can get away with not doing this worksheet and just going out and picking a stock to gamma trade, I think you're going to be sorry if you do. You really need to go through the worksheet to find the very best candidates with the lowest historical volatility rating and the highest profit index. If you do that, it'll keep you out of a lot of trouble. Okay, just a quick update. I'm going to narrow down, I'm looking at narrowing down 2 more gamma scalping candidates. One is Adobe and the other is CMed. I've checked them both. They're both easy to borrow. Their profit index is about the same, but about $1.51, $1.54 for CMed. They're both in the mid part of their volatility ranges. They both have good range probability. CMed is quite a bit more expensive at the Muddy Straddle than Adobe is. But as far as the range index and the cost index, they're pretty similar. Adobe's a little bit cheaper, obviously, because it's a slightly lower price stock with a higher profit range. So I'm either going to go for one of these. My feeling is that Adobe would probably be a very good bet. But China Medical here over the past 60 days, it is at the lower end of the volatility range for the last 60 days for CMED. And if we kind of drill down into some of these issues, even though they appear to be on the mid end of the range on their daily charts on the last 60 days or so, on the hourly charts, they seem to be close to the low end of their range here. So either CMED or Adobe Systems either one would be a pretty good candidate to go with. And my feeling is that Adobe looks like it's very good. CMED concerns me a little bit because it is pretty expensive and it's had a pretty good run up, and I'm just afraid it's going to be it's not going to move as much anymore because it's already been up and down so much. So, but it's probably a fairly good candidate to keep an eye on. So I'm going to go ahead and put an order in for Adobe. The only thing I want to check before I do that is just to get an idea where the Dow Jones is and see what the volatility is like on the Dow Jones. It was up and it's starting to come down just a little bit. Let's take a look at the daily chart. Looks like we've got somewhat of a reversal going on in the Dow Jones, which could reduce volatility across stocks. And the only other thing I want to check is to see if earnings are coming up for either Adobe or China Meta in the next couple of days. Yeah, there's not one today. Let's see. Adobe, I think they already had theirs, didn't they? ADB. And CMED. I'd probably just go on the chart and take a look at it, but yeah, CMED's coming up on August 4th. So there may be an increase in volatility to August 4th for CMED here. Kind of hard to tell. Let's take another look at this. And a daily chart, the volatility is right in the middle of the range. On a 5-year chart, it's a little bit on the higher end of the range. But on the daily chart, it's right about in the middle. Certainly has been higher. And volatility may increase before we get to earnings. Okay, so we're going to go with Adobe. Basically just checking the chart out here. It looks like it's it's kind of in a trading range. Volatility has been increasing over the last 9 months, but if we take a look at the 60-day chart, we're definitely on the low end of the 60-day chart here. Because we've had a few up days and it looks like prices have moderated and stabilized somewhat. This might be a good entry point, so we're going to go ahead and let's go over to the Analyze tab for a second. I've got this set up already. We're going to buy 10 of the straddles of the of Adobe August 40s. That seems to be the closest to the in the money at 41.21. We have to purchase 300 shares of stock in order to get delta neutral here. and that's fine by me. We're just going to go ahead and enter the order for 300 shares to sell 300 shares of stock after we get filled on our straddle here. We're going to try to enter it in at the mid price just to see if we can get it, and we'll go ahead and enter that. Let's just take one quick look at this. Adobe was 263, now it's 265, so volatility has increased just a little bit, but the implied volatility is very nice at 39. Let's just double check and make sure it's still 39 here. Yep, still 39%. We've got a fairly decent range, so I think it should be a pretty good candidate. Now, if it doesn't move, that's the only danger. If it doesn't move, then then we're going to be, we really need to think about it. But let's see if we can get the order in at least at 268. In the meantime, I'm going to bring up CMed here, and see if we can't find a way to do this a little cheaper. If I did go out of the money on these, if I went to the 45, you could do a strangle rather than a straddle. That'd be a little bit cheaper on CMed. Let's see what that would do here. You can always analyze that. Oops, I got both calls and puts here. I want the calls, I want the 40s. I'm sorry, the 45s. Is it the 45s? Let's see. I want the 50s and I want the 45 puts. There we go. So it is a little bit cheaper. That puts us into a relatively neutral delta position right here. I'm not crazy about starting off with a $200 loss on this though. So we could buy some shares. We could buy 60 shares of CMed. Let's go down to 60. And we're back in the middle, but certainly we'd be starting out here with a loss of $200, which I'm not crazy about. That's why I prefer straddles here to begin with. Let's see how we're doing on this one. Looks like it's still working. Let's bring up the order. Now it's at 270. It's already gone up. So we may not get filled here on this. It's already gone up to 270 now. It doesn't look like it's going to come back down for some reason. As soon as we put our order in, the mid price jumped up to 270, and so we're 2 cents off, and they're not going to give it to us. So we've got a couple of choices. We can just kind of wait. We've got about 30 minutes before the market closes. With the Dow Jones Industrial Average up 234 points, that means that it's a good chance that volatilities will continue to come down. Let's go ahead and check our AVP here. Looks like it's been up and down just about all day here. Isn't really making much progress. Other than this morning, we didn't make much progress. I'm pretty glad that we actually locked in some of those profits this morning by selling short. We locked in a couple $100 profit here. And we are just about delta neutral. So there doesn't look like they're going to move the they're going to move Adobe here down lower. could always leg into this by trying to split the bid and ask, but that's not always possible. What I could do instead of lowering it, of raising it, I could actually lower it. See if that has any effect. Let's see if that moved the bid ask at all. Didn't move it. The only reason I'm not going to increase my bidding price at this point, the only thing I'm really thinking about is the fact that I have to short 300 shares in order to get delta neutral. And I guess the big question is whether I want to short the stock opening the position when we're up 236 points on the Dow. Well, as I take a look through my list here, Disney is coming out with earnings after the market tomorrow. Let's take a quick look at Disney's chart. Volatility over the last 60 days is fairly low. Let's take a look at the 5-year, see how it is in relation to the 5-year. It's middle to high. Some people think that Disney's earnings are going to be disappointing. I have no opinion on that. Let's take a look at what the current straddle is selling for. At 30, it'd be about $31 is the last trade, so the 30 straddle will be right at the money. It's selling for $245. I think I analyzed this before. Disney was right up here at $233. So it has gone up in value. I think the closer they get to expiration, the more valuable it actually, the more value it had. Oh, I got my straddle. Hey, all right. I got my straddle on Adobe. Awesome. Okay, now all I have to do is, let's see, do I still have to sell 300 shares? Actually, oops, there we go. Gotta get rid of that one. Yep, I gotta sell 300 shares. So I'm going in to sell 300 shares of Adobe. Yeah, and I got it. Perfect. So I have another gamma trading opportunity here with Adobe. All I did was actually I ended up getting it a little bit cheaper than I wanted. I had originally put in my order for $2.68, and then I eventually lowered it. I lowered it to $2.65, and I ended up getting filled on it. So it just goes to show you that you know, if you stick to your guns and get the price you want to get, you know, not what the market makers tell you to get. Get the price that you want to get. So now all I have to do is determine. Let's see. If we're up a point or two, looks like I'll split that. So I'm up $1. I'm going to be long 200 deltas, and I currently am short 300 shares of Adobe. Let's go over to the chart real quick, and we're at 41.11. If we trade down, we'll make some money, but certainly at least we have our position here, and I think we should be good to go. I'm just going to put this into my mini charts. I'll show you this just for a second. I keep a bunch of mini charts over on the side here, and so that's where we are now, and it's already starting to trade down a little bit. So we're delta neutral. We're beautiful here, right in the center, and we got our position on, and now all we have to do is manage it. So that's it for today, guys. Let's just check out AVP before we finish here. Let's see where we are. It's been up today. It got almost very, very close to 38, and then it kind of backed off a little bit if we analyze it. We locked in a profit of about $200 for the day. Now that we have two positions on, and we're going to see if we can't add another one tomorrow. But now that we have another position on, hopefully we'll be able to rock and roll here for the rest of the option cycle. We got 17 days left. I'd like to add one more gamma scalping trade onto it, and I think we're good to go. So trade with confidence, and I'll talk to you tomorrow.